lots of different camera angles in here, so we're trying it today.
All right. So, housing market update 2023. It is now January. We've got information from what's the new HOA, or what's the association called? I can't call it the same thing. It's Sierra Nevada Realtors.
Yeah, they merged. So what we're doing today, I'm Ken Angst, team leader of the Angst Real Estate team. This is Brian Cushing with Guild Mortgage, and we're doing our Friday monthly update on what's going on in the market locally for real estate. So, Brian, we always have you in. Thanks for coming in. Hope you had a good New Year's and Christmas. So
we're ready to launch.
Yeah, we're ready to get back in the market, and things are picking up. Can you tell me from a lending perspective what's going on locally? What's your pulse?
Since Christmas, things have started to open up a little bit. People are showing interest. It's not as usually January 2nd. You get a lot of phone calls, follow-ups. Wasn't like that the first week. The second week of January, it's really picking up. You can feel the energy around people trying to figure out what they want to do in 2023. Not necessarily want to buy anything, because we're going to see in a second there's not a whole lot to buy on the market. So there's definitely a good feeling. That's at least my take on it. But we'll see. It's going to take a little time to get some homes on the market and get them under contract. That's taken a little while.
Yeah, and we've talked about this before. Obviously, people are busy with the holidays, so from about Thanksgiving to Christmas, everyone's thinking about one thing: family, friends, which they should be. And then what we usually experience, especially in this market, it's a little slower than it has been. People start, thinking about what they're going to do in 2023, like you brought up. So what we're going to do is we'll go over the numbers and kind of talk about what the numbers look like, and then we're going to talk about a lot of people out there are getting seller concessions. A lot of sellers are offering concessions now to be able to sell their house.
Ink the deal, right? I mean, sometimes it just takes a little oomph.
So if you are a buyer out there and you're not, and your realtor is not asking for seller concessions, you might want to watch this. And we're going to talk about the guidelines. Obviously, there's a limit if you're doing government-backed mortgages on what a seller can concede to get the deal done. So, all right. So I'm going to start off. Median home price. I finally win a bet here. The price is down. It's down to $519, up almost $520, and this is for December. Down 5.5% from November, and down 5%. Actually, a negative number year over year. So last December we're down.
So does that mean housing prices are going down?
They're going down.
The median price is going
down.
That means half of the homes sold above and half of the homes sold below. But I'd say a $520,000 house is still pretty expensive.
Yeah, it's still pretty expensive, but it's coming down, because I think the heights we hit late last summer, the median home price here was a record. It was around $615.
Okay.
So we're off around $90,000 to $100,000. So we're down.
Okay. Fair.
And houses are sitting. So let's talk about closed sales.
394 closed sales. Now that's a pretty far drop.
Year over year it is.
40% drop year over year. 41 rounding up. 14% month over month. There's not as many homes selling, but I think that has to do with how many are available.
Yeah, and it's down 14% month over month. So my commentary on that is huge drop, 40% year over year. So the market is definitely not as hot. And if you look back at the numbers, the market really picked up in December last year. It was screaming where, a lot of people couldn't buy a house. So I think in my opinion, we're moving towards a more normal market.
Yeah, that's right. Because December last year was insane.
Yeah.
Last year, more of a year ago, 2021, December the rates were still really low. It wasn't until really January when we had the pickup that never stopped.
Yeah, the rates were low. And by the way, what are we sitting at for a mortgage?
They're sitting at like 6.5, roughly.
6.5.
Yeah.
And it kind of depends on if you buy something down, but in your credit.
They were close to 7, a little over 7. So that's down, right? That helps, but
that spurs activity when people start. And we'll talk about some of the other things that concessions that sellers are offering to get buyers in.
Well, that throws in that price, the median price. The price doesn't come into play. Like, what if there's another $20,000 in concessions? Is the price really $500,000?
Yeah.
Now we're going to get into a little bit of a rabbit hole.
Right. Well, that is a rat hole. So, but let's talk about median days to market. It sits at 55, and we haven't seen that number, oh man, in like 5 to 10 years. And that's just a reflection of the market slowing down. People aren't rushing in to buy houses. They're sitting there for a little longer. And, you know, back in the good old days.
What, 3 days? Were those the good old days?
No, those weren't the good old days. But, you know, typically in a typical market, not in the last 10 years, but before then, you know, houses tend to sit on the market 90 to 100 days.
Yeah, okay.
Not off in 3 and not off in more than that. So,
Well, supposedly, less than 60 days is still a seller's market. Is that fair?
yep.
Okay.
So 55 days and
But we just got done saying the sellers have to give concessions. So is it a seller's market or is it a buy? Is it even?
It's even. It's
Okay.
evening out, and we'll talk about that. And so it's down. It's up 240% year over year, and down, or actually up from
Last month.
November about 27%.
Because I think it was like 30 days roughly in November.
It's
so-
going up.
Yeah, so it's taking longer to sell your house. 96.8% list price received. That is, I've learned some really interesting stuff about the game that's being played within the multiple listing service sometimes. Because apparently you can change the original listing price when you go into contract.
Oh,
I just learned that this week.
I'm not saying you can do that.
Well, see, and I'm not a realtor, so I'm going to say it. I've heard that, which, you know, we're seeing houses that are selling with concessions, so that's going to mean it's technically way below the asking price. That's the stat that SNR put up, so there it is.
Yeah, so that may not reflect if you're getting 3 or 4% for closing costs or rent right buy down. So that only reflects. This is the key to this whole number. Not a big fan. Maybe they'll change it, but that only reflects from whatever prices when they went into contract. So sometimes we're seeing $50,000, $100,000 reductions. This number does not take into consideration. It's the number that the last time they lowered it.
Got it.
So
Okay.
take that with a grain of salt, and it does not include any concessions. So
It's
it could
below
be.
asking price. That's the very minimum we should take from that.
And you know, this was a relevant number when people were bidding up, and so
Yeah,
someone
about a
listed
year
it. Let's list it, and then 3 days later, it'd be out the market and would go for 105, 110%. So, median sold price per square foot. Not a big fan, but it's under 300. It hasn't been under 300 in many years.
Hey, that's a deal.
Yeah, I guess. But just keep in mind that the reason why I'm not a big fan of this is, and we've talked about this a lot, is, I mean, in some neighborhoods it's street by street, house by house. It really depends on what is going on in the house, if it's nice, if it has improvements. So, but it's a good rule of thumb that if you're out there trying to find out what.
Well, if
If
you
you're
got like a 2-story house is going to get a less dollar per square foot than a single level house. But when you just mix it all together, the median, it's just a fair
Half or
number.
above and half below,
So
but it's
down 6.7%.
if you're looking at a $500,000 house and it's a lot more, a lot less than 288, there's obviously something going on. So that's why I like.
We'll use it as a marker.
What about new listings?
311 listings. Now, wait a second. There was 394 closed sales, and there was 311 new listings. What's wrong with that math?
Yeah, so that means that we've closed, less listings more houses sold than listings came on the market. And that kind of just eats into the active inventory.
Well, yeah, which we're just going to jump right into it. 1,080 homes active inventory. Does that include pending sales, or is that actually active?
That's only active.
Only active. Okay. That's
So
what's
if you go
active.
on the MLS and you just say, I want to see all houses, you got to be in the boundaries of the Reno Sparks Area 100, you'll see 1,080 homes available. And that's up 120% year over year and down 20%. So the down month over month indicates that more houses are being sold than new listings coming on. But that's very typical. People don't list their houses in this time.
Wintertime. Well, it did snow a lot, so.
Yeah, we're in a record snowstorms. 260% of normal.
Hey, hit the slopes. Sounds awesome.
Mount Rose is pretty fantastic right now if you don't get caught on a wind hold up there. So, so there's actually quite a few homes on the market.
Yeah, 1,000
and
homes, that's something to pick from.
And that's going to be something that going forward, I think that number is going to get bigger, obviously, as we move into the springtime.
Cool. Month supply, 2.7 months supply. So that means of the 1,080 homes, in 2.7 months, if nothing else came on the market, they'd be gone.
Yeah,
So-
assuming 400 sales, yep.
Yeah.
And just keep in mind, we're always trying to figure out as a group if we're in a buyer's or seller's market. And 4 to 6 months of inventory is typically a equal market.
Okay.
But we rarely, if you look at the graph, and we can maybe show it one time, we rarely hit that. It's either you're above or below. Sometimes we'll cross over.
Yeah. Well, you always, yeah. Well,
And
that's
just
the
give,
thing.
just to
It's
give,
never, nothing ever stays steady.
right.
That's what I've
The
seen.
pendulum swings one way or the other. Just keep in mind, in 2007, 8, 9, the inventory, the month supply was about 20 months. So we're not. So people keep asking,
Far
are
cry
we
off of that.
dropping in the market? No, we're pretty much leveling off. So.
Yeah, that's fair. Level off. All right. Well, that's the numbers. That was December. That's in the past.
Yeah,
Now it's
and
2023.
And if you're online right now, we see quite a few followers. You're allowed to text in your questions. We can kind of see what the new technology. We're running several different cameras, so sorry if we're not in every single one at the same time, but we'll have to take a picture of our setup. But now, let's talk about seller concessions. We've been talking about this. Most of the deals, if I'm the buying agent, selling agent, I'm seeing some kind of concession. If it's price.
If you don't ask, you're probably not going to get it, right?
Right.
So that'd be as somebody that works only for sellers or only for buyers, take it out of the seller's pocket and save yourself some long-term money. So yeah, you can get seller concessions. We've kind of mentioned.
What is a seller concession?
So basically, it's any. Well, let's specifically call it interested party contributions. So let's say you wanted to give somebody part of your commission to help pay their home warranty. That's an interested party contribution.
Okay.
The seller can push money from their closing. So if they list the house at $520, the median price, and sell it for $500,000, but then also negotiate $20,000 in closing costs, those closing costs can go towards the buyer's recurring and non-recurring closing cost, which would be non-recurring is just like your appraisal. Recurring is like your home insurance. But those total costs at close of escrow can be minimized. If you have less than 10% down, you're going to be limited to 3% of the price.
Okay, so if we're dealing with that $500,000 house, you get 15.
15. Now that's a lot of money, but you can actually go to like 6 and 9% seller contribution. So an FHA loan, 6% of the price can be used towards closing costs. So
Are you seeing any of those? I'm not seeing 6.
I have seen it. Yes.
I've seen it.
Builders have gotten rid of some homes that way, and it's. You're talking about like an interest rate from like a year ago. If you do that, that's a lot of money.
Right, and then what? And I think you just covered this, but what can they use that for? They can use it for.
Yeah, they're points or buy downs, like a lower interest rate. So that's a cost up front to minimize your monthly cost. You can use it towards a temporary buy down. Temporary buy down, you would have. Let's just use the 6.5% number. 4.5% year one on a 2-1 buy down means 2% lower year one.
How much does that cost though?
Close to 3%.
Okay, 3% to get
Not quite, but
so get the first 2 years bought down to 4.5. The next year,
just year one is
Just
down
year
to 4.5.
And then 5.
Year 2, 5.5. Year 3, 6.5 for the rest of the loan. So it's a 30-year fixed loan. You're just getting a short-term relief. So the seller is basically paying your interest in advance. That's all that's happening there. There is still the same amount of 6.5% interest due. You just don't have to pay it. Hence, seller credits.
okay, and then so the interest. Now, we got to talk to an accountant on that, right? Because if someone else
You're
is
going to
paying
want to
for
close your save your closing statement and give it to your accountant. Sure.
Yeah, because there's probably something going on there, and I'm not an accountant, but if someone else is paying your interest, you may not be able to write that off. So check with your accountant on that.
Definitely
And
seek out CPA's advice there.
Yeah.
So you can go 6% if you have 10% down on a conventional loan. FHA, you could have 6% seller contribution. You could actually have 9% seller concession if you put 25% down.
9%.
Now that I haven't seen that since 2010. There was no reason. There was no seller willing to spend that much in that kind of a concession in a really long time. So.
But what do you use that for? Because on a typical closing, I tell people 1.5%, 3% for all the closing costs.
Well, okay, so let's say it's a condo and it's $300,000, right? So, and you do buy downs and it's got an HOA of $400 a month. You could prepay the HOA for 2 years potentially.
Okay.
We can come up with some costs. I don't know. It would be a ridiculous amount of money to spend, but you can do it. You asked me to tell you, and there you go.
Okay. And is there what about the occupancy? If it's an investment property, does that
That
matter?
does make a difference, yeah. So there's always a maximum 2% seller contribution towards closing costs for an investor. So if you're buying a rental property, it's not as sweet of a deal.
Okay, so this is important. Make sure that if you're working with a realtor or in a transaction, you're a buyer.
Well, if you're going to negotiate something, you should definitely know what the options are. So talk to
Yeah,
your
so-
mortgage professional, talk to your real estate agent. They should be a team.
Now, do they fluctuate? Because this is a guild product.
No, this is Fannie Mae.
All right, so it's government loans. This is what you can get out of it.
Yeah, Fannie Mae, Freddie Mac.
And is there any thought that they may change that? Do they fluctuate?
They haven't changed this in
Okay.
a really long time.
So talk to your professional. Make sure that if you're buying a house, that you have a realtor that's a strong negotiator. Because I mean, maybe you don't want that, and you have to look at all the options. Maybe a better price over the long term is better for you. If you
Well, yeah. Well, I mean, what's your time horizon? That's really what it's going to
Yeah.
come down to. Are you going to keep the house for 5 years? That's a different thing than if you're flipping it.
right,
If you're going to keep it for 12 months, no, you don't want the money for closing costs. That'd be crazy.
right, and then if you're an investor, maybe you want a longer term buy down the rate. What does it cost to lower your rate by half? Is there
I mean, the
it
general.
kind of depends on the day?
It depends on the day, yeah. The 1% of the loan, so we're talking about the purchase price for these concessions, but if you're buying a $500,000 house, and let's just say you're doing a $400,000 loan, 1% is $4,000. That would generally reduce your interest rate by 0.25%. But that starts to run out. You can't just multiply 1% and take 0.25% off. The scale starts to get more and more expensive, so you end up running into it's not worth the extra money to buy it down too deep, right? That's something
It's expensive. Yeah,
Heck
unless
yeah.
you're getting 9%.
Well, I mean, you're thinking about the investor. So the people that are going to accept the money up front, they're going to take a lower rate of interest. Well, I mean,
For the $1,000, they're not going to do it.
well, and inflation was at like 5.7% on the kind of core CPI or Consumer Price Index this week. So if your money's costing you 5.7% per year, according to the government CPI report, then if you're going to take let's say, an interest rate less than 5.75%, you're going to need to pay up front. The investor doesn't want to do it otherwise.
All right, so what's your crystal ball say about where are rates going in 2023?
Oh man, the crystal balls are scary.
I know, but we got to put you on the spot here.
Yeah, so, well, the Federal Reserve has been raising interest rates. They raise the short-term interest rate, and they affect monetary policy overall. So with the most recent news, at 5.7% Consumer Price Index, the Fed's rate is 4.5%. And I just said that mortgage rates are probably quite a bit higher than that. So my crystal ball would be in the next 6 months, we would see potentially a downturn on rates. Maybe we could start seeing them in the fives. By the end of the year, the low fives could be possible. That'd be my crystal ball for today.
Yeah, so hang in there if you're, I mean, at 6.5, it's tough.
Well-
You just start plugging that in the calculator.
Well, sure, yeah. I mean, if you take 6.5, let's say it fell to 5.5 by August, just as an example. What do you think is going to happen to the few homes that are on the market?
They're probably gonna
They're going to disappear.
Yeah, right. So, and that's one thing is that you gotta be careful in these markets because they can switch quickly.
Well, that
And
just happens that way, yeah.
the best thing to do, in our opinion, is if you do need to buy a house, we're not be aggressive, but be out there shopping right now. And if it makes sense financially, and you can get a seller to give you 5 or 6% and get down, go for it.
Well, if your lease is up and you need a place to stay, why not see one of the 1,000 homes that are available? And if it doesn't
Because
work,
rents are still high. I'm just telling you. So
absolutely.
if you're paying $2,000 or $3,000 a month in a apartment or a rental, then it makes sense for you, financially speaking, to go get a mortgage and pay yourself every month. Essentially, do it. But you got to have a long-term horizon. So anything else?
I think that's all I got.
So we're gonna start doing this every month, and we're gonna send out invites. So make sure you're looking on Facebook. We're gonna be checking in live. We're gonna send it out over LinkedIn, Instagram, the whole shebang, next door.
We will be online. All
And
right.
then like our videos. Brian, what's your number? How do they contact you?
They can check me out at homeloansreno.com or call 775-453-0345. Love to talk to you.
Okay, and then keep in mind that the Angst team's at livinginsouth.reno.com. Check us out. Subscribe to our videos. We have a lot of good content. We just talked with the assessor. Really good discussion about assessed value. So if you get an assessment value,
My friend in Texas was very thankful for that.
yeah, so we share it. People in Texas are looking at it because people are, doing some loans down there.
They're buying houses here, and they were like,
So-
where did you get this crazy
We have a
number
lot
from
of
Texas?"
great content. We've talked to a lot of title companies, professionals about different aspects of real estate. So check us out on YouTube, Angst at youtube.com, and then get on our subscriptions for newsletters.
Yeah.
If you have any questions, feel free to reach out, and we appreciate everyone online checking us out. Take it easy. Thank you.